Hello, this is Jason Wink, and thank you for checking out today's market update video. Today is Tuesday, April 8th, and it's about 11:30 a.m., so just about halfway through the trading day. It's been a little while since I've done a update video. It's been a busy spring for my family with the kids' activities and spring break and now tax time. So my apologies if you haven't seen a video for a while. It's not that I've disappeared from the face of the earth, just been very busy. In any event, wanted to make sure I did get this done because I've been following this same chart. I've been showing this for the better part of the last probably 2.5, almost 3 years. And it's so fascinating to look at, but this is a S&P 500 daily chart. This particular chart looks back at the last 12 months. So each bar that you see on the chart represents a trading day, and the white bars are the days the market went up. The red bars are the days the market is down. So if we look at the far right, this is the most recent history. And we see the last couple days were two pretty good-sized drops. And whenever we have these, it's interesting how many people start to panic. But if we actually look, fairly closely, we can see that over the past year, the S&P 500s went from about 1,560 up to about 1,850. So, it's still up quite substantially. And from its all-time high, which it just hit 3 days ago, the market has only dropped about 40 points or so, 45 points thereabouts. So, not a huge, massive decline or anything like that. Again, relatively modest in the grand scheme of things. I should also point out that this is really exactly what we would anticipate, because if we look at this, I call it a channel, the red lines that are moving from the lower left to upper right. The top bar has been representing sort of the top end of this trading range. So as the market's moved up, every time it's kind of gotten to the top of that, it's tended to struggle just a little bit, and then it falls down. The middle line that's sort of dashed here is as the market's fallen a lot of times, so more than half the times it's fallen from the top, it's actually hit that middle area. There's been a little bit of resistance from the market falling further, and then it's actually recovered and went higher. You see it did this quite a bit in the last 2 months. There have been a few times, though, that it's fallen through this middle range, and it gets all the way down to the bottom. And the bottom is, again, the other solid colored red line. When the market's done that, again, over the past almost 10 months, this current trend that we've been in, every time it's fallen down to that point, it's then rallied back up. And the difference between the very top end of this range and the bottom, as I've measured here, is about 5.8%. So when we're moving up, there's been a cumulative gain of, close to 20%, but it has been moving, again, in a range that has about a 6% delta, between the top end and the lower end of the range. Where we are today is we've just broken through, as of yesterday, kind of that middle band. The market's kind of sitting around this blue squiggly line. It's a very technical term, but the blue squiggly line is simply the 50-day moving average of the S&P 500. So it's just the average price over the last 50 days. And that's a pretty common technical indicator anyway, as far as where there's sometimes going to be some support or some resistance. Support is when it hits that level, the market kind of wants to bounce off it and go up. Resistance is when it's below it and it's on the rise, it'll hit it and it kind of acts as like a little bit of a glass ceiling, so to speak. So right now it's just jostling around that 50-day moving average range, and it's very feasible that this will break and the market will fall somewhere another maybe 20 points or so before it hits the bottom end of the span. And really that's the point that we have to look at things and go, okay, is the great long rally we've had for the past few years, is it finally ready to have that larger scale correction, where it goes down 10 or 15 or 20%? I haven't had one of those in a couple of years. It definitely will happen eventually. I think we all know that. But we really can't make a call like that until we've seen that this trend, which we've done this exact pattern for, again, quite a long time, where the markets hit the top end, move back down to lower end, just to kind of continue to stay in this rising market channel or trend. So wanted to show this today. Also, I'm going to take a quick peek at the long term. So this is the one we just looked at, was kind of short term. This chart right here is a much longer term view of the market. So this is looking at the last roughly 15 years. and each bar here is represented by a single month. So this is what we call a S&P 500 monthly chart. And the reason why I point this out is when we look at this market in this type of view, we can see the last two really large declines, the one that happened from 2000 until early 2003, and then the most recent, which was the financial crisis from late 2007 to up till about March of 2009. And so when we look at those are big, big declines. If we look at where we are today, we're still very much at the top end of a rally that's lasted about 5 years. It's not the time that we have to panic just yet, but certainly you can see that there's some similarities between the last two big declines. Namely, if we look at the top of this chart, the market is overbought. That's what happens when you get these green peaks. It's essentially the market's went up too much, too quickly. But this particular chart also has some nice little warning bars and sort of green light or go bars that I've put on, which just identifies to me the long-term sort of multi-year trend. And it had a green bar that was put in about a year and 3 months ago. So about 15, 16 months ago. We've been in a really nice rally ever since then. And until we have this to where another one of these red bars, that's kind of like our warning that maybe a larger scale correction is coming. It doesn't mean it always does. You can see there's some false warnings, like this red bar that happened in late 2011. There was one that happened in sort of middle of 2006 where a warning sign is sort of issued. 2 months, 3 months later, it's proved to be a false warning, and then the rally resumes. But we still, again, until we at least even see a warning sign, there's nothing to panic about. It's very natural for financial markets to move up and down. In fact, I'd say it'd be highly unusual if we didn't have a at least decent sized correction relatively soon. When we look at this type of view, we can see the last time we've had any type of real meaningful correction in the financial market, stock market specifically, it was the summer of 2011. So it's been quite a while. And even that and the one that was in the summer of 2010 were both pretty modest. So we'll keep a close eye on this. There may be some interesting seasonality twists. I'm sure people have heard the saying, sell in May, then go away. Obviously, we're only a few weeks from May 1st, so there's some interesting things that happen, though they aren't necessarily scientific. It's more of just a saying. So we'll be sure to revisit those as we get closer to May. Take a look at this long-term view of the market, as well as the shorter-term view, which we looked at to start this video. That should do it for today. I'll be my travel schedule is very light the next couple of months, so should have more opportunity to post updates. I think the timing is great too, because markets again are fairly overbought. There's a lot of reasons for people to perhaps at least have a concern. So I'll make sure I address those in this video and those to come down the road. Thanks so much for checking this out. If you have any questions or comments in my blog below the videos, if you scroll down a bit, there's always a spot you can add comments. Just know that those comments are public, so if you put your name in there, everyone will see your name. So if you're going to leave a comment, maybe just use your first name or your initials or something like that. If you want to send a private message, you can use the contact form that's also on the blog, or just hit the reply button if you're getting this update via email, and that'll come right to me. Again, thanks so much. Have a great rest of the week.